This is Ann McNeil, and welcome to our National Association of Black Women in Construction Investment Club. Today and every second Tuesday of the month, we come on live to share our investment club education with our members and our guests. And if you'd like to participate with us, we welcome that. If you are here for the very first time, we like to always start everything with a silent meditation of prayer. So if we can all bow and just do a breath. Um, we can bow on the count of 8. Deep breath. Exhale. Amen. Just want to thank God for the breath of life. And so, with that, we're going to introduce all of you to our Investment Club Education Tuesday. Now, we are a part of the Better Investing family. You can go to betterinvesting.org and you can get more details about who we are and what we do. But you can also join us as a part of our club. If you're interested, we'll share information with you about how you can do that. But we also want to just make sure that each of our guests understand that we're not selling any stocks. We're not recommending any stocks. All we're doing is sharing investment education to our audience. And so that, with that thought in mind, we're going to go ahead and get started. So as a part of our members, who among our members would like to go first? We'll do a quick roll call for our members that are here. Ann McNeil,
Aretha Dennis.
Carolyn Modest.
and we also have Sharon Jackson and Nicole Allen. I think that's about it. I'm not sure if they're able to speak.
Yeah, Sharon Jackson. Thank you.
Thank you. Thank you. All right. We also like to recognize our guests that are here. So if you're a guest, if you would like to come on camera and come off mute and introduce yourself, share with us your name and what motivated you to join us today. And then we'll get into our education session.
I can go first. Good morning, everyone. My name is Dr. Daniela Gillette, and I'm actually a newly member of the NAB Nabwic, I guess. I work as a real estate advisor for Compass, and I have over 12 years of experience in corporate America. I just wanted to join to just learn more about this investment club and look forward to being a member.
Thank you so very much. Thank you. Next, please.
I can go. I'm Dr. Zelda Okia. I'm out of the Milwaukee Club. I'm a physician, I'm a medical examiner, and a life coach. I'm still president of our local Milwaukee Club. It's called CASH, which stands for Community Social. I don't remember what it stands for, but it's socially to help get more financial information out to our community. And yeah, I'm working on, I got to get that book report done. I think once I get the book report done, then I want to join this club. So I'm working on it.
All right. Thank you so very much, Zelda, for always being here. Who'd like to go next and share, please? Okay. Well, everybody else can stay on mute. We don't want to thank you for joining. And so, as a part of our club, if we have anybody would like to give their information first.
I'll go first. This is Doretha Dennis again, and I am secretary of the club. I'd like to share screen because there is something that I found on a Better Investing website that I used early on when I became an investor that has helped me so much. I heard Ann mention earlier that if you're interested in becoming an investor, that there is a free version of the SSG and a free membership on the Better Investing website. I'm sharing now the the website. It says if you don't have access, free limited trial version, and you can click here and get a free membership, I think up until 90 days. There are so many tools on this website that you can use. And there, like I said, there is one of them I I downloaded early on when I started out investing, and it is the stock selection guidelines for beginners. And this reference sheet has helped me so much. I keep it handy when I am looking at stocks. As part of the club, we're responsible for several stocks and companies that we look at on a daily or weekly basis. And we're to keep an eye on them to make sure they have the growth that we're looking for in a company. And this particular worksheet says step one, perform a quality check on your selected stock. Um, Amazon is one of those that I look at every week, and I'm looking at the front page of the SSG tells us the graph shows up us if it's growing steady, that it is straight, parallel, up straight and parallel is what we call it. And we want to make sure there is sufficient growth for this company. It is as a matter of fact, it's a mega company. It has more than $200 billion in sale. However, you have small companies, medium companies, and large companies. You want to always make sure that they have sufficient growth while you're looking at the company on a weekly basis. There is another portion of this worksheet, the pre-tax profit on sales. It says it should be steady or increasing on a monthly basis. The profit margin should be as good or better than the competitors that's in the same market. And Amazon, of course, has they have several different components, so therefore they have several different competitors. It also speaks to the ROE, which is return on equity. That also should be steady and increasing. When we look at large companies, though, we know that sometimes their growth is a little slower than a small company or a medium company. Sometimes they've hit that plateau where they are maintaining and just growing slowly. Also, this growth, or if there are significant changes in a company, you should be investigating with and looking at what's happening with the company. We also look at their debt. We call it debt to capital ratio, and there is a 33% debt to capital ratio. We don't want a company to get beyond that. If so, we start to look at what kind of changes are taking place. Step two, add judgment to complete your SSG. Now, these are judgment guidelines. You, as a new investor, should be looking at these things to keep you out of trouble. The sales and the earnings per share. Uh, Understand what the company does to make money, what drives their future growth. Those are things you should look at. Um, Amazon right now is competing with other companies for the AI. And so I'm looking at that on a daily basis. There are several companies or websites you can go to help you with this. Yahoo has a finance portion of their website. Value Line and Morningstar are two others that we look at. It says a good rule of thumb is to limit growth projections 15 to 20%. Use extreme cautions if these estimates are above 15%. So when you're making your projections about growth for this company, a good rule of thumb is not to not to go beyond that 15 to 20%. There are three other components to this worksheet. I don't want to continue to hold you, but one of them is where we make a determination if we want to buy this company or buy more shares in this company. And it has three guidelines here. It says buy only when the SSG says that the stock is in the buy zone. Buy only when the upside downside ratio is 3 to 1 or higher, and buy only when the total compound annualized return is sufficient for your portfolio. A portfolio that grows at 15% compounded annually will double your money in 5 years. Now, I know you're probably saying an SSG, that's another story for another day. And SSG is a tool that we use. There's information that we put in according to their finances. And so this is just something I wanted to share with you, the guidelines. If you are a beginner investor, this is a tool you can use to help you on a day-to-day basis. Thank you for allowing me to share that, Ann.
Excuse me. May I go next?
Sure.
I'd like to piggyback on what Doretha just did. I'm having
Okay.
issue getting in on my laptop. Can you please go to the first page again?
Okay, I'm there.
Okay. Now I need for you to go to tools
Okay.
because,
You want me
and SS and go to, yes, go to the stock selection guide, please. By the way, I'm
Okay.
Sharon Jackson, just in case those people that don't recognize my voice. What's going
Okay, Sharon.
I need for you to hit stock select, yes, stock selection online tool.
Okay.
Thank you for helping me.
Absolutely.
So, so Doretha mentioned AI, and Better Investing is trying to get into AI also. So I'd really appreciate. So one of the things that you're going to notice when you get into your stock selection guide, you're going to notice all of the icons along the left side of the tool, right?
Yes.
One of the icons says AI. And that icon was just put there. Well, actually, I don't know. I saw it about a month ago.
Mhm.
And I think it's important, it kind of piggyback on what Doretha was saying. When you think of AI, you think of Perplexity, you think of Chat GBT, you think of all these others, and now they have added an AI link. Can you go ahead and hit that AI link for me, please? Now, it's not what you think. It's going to tell you on the bottom that it's going to answer a question. Well, what it will not do is give you information about stock. It kind of helps you if you get brain fog. If you go down into the chat and you put earnings per share or ESP, what's going to come up? What's going to come up is an explanation about what earnings per share is and how to think about it. Is it doing it?
It is.
Yes.
There we go.
So what's going to happen? It tells you how that works. What is ESP? Gives you an explanation. It gives you what the formula is. Tells you if you don't want to rely on them. It tells you how to calculate the formula yourself. Okay? So that's really important for us to know. Again, it's not going to tell you about the stock, but it tells you all the things that Doretha was just getting into. Now, if you type in, how do I understanding good ESP? Then
How
it's
do I understand good ESP?
yeah.
Okay. Earnings per share. Okay.
Did it give
It's
you
it's sending. It's sending.
okay?
There we
It's,
go.
it's going to tell you again, I can't provide individualized investment advice, but understanding good ESP, there isn't a single good ESP number. Okay, but it starts giving you putting it in context of of company size, industry, growth rate. I just all of the information for you to understand, what further understand what is a good ESP. Now you might put in the question about how to understand a good growth stock. Is that a good next question? Hold
I
on. Yeah, characteristics of a good growth stock.
Sharon, you're putting me on the spot with my typing ability. There we go.
Okay.
Um,
So what?
yes.
Yeah. So now it's going to tell you key characteristics of a good growth stock. Constant
Mhm,
growth. It's all the things that I think that Doretha was going after before. All the
mhm,
things that it tells you in those sheets. But in the instance that you are in an SSG and you need some information and don't want to hunt through the Learning Center to find the pages, you go to the AI and you ask it,
mhm.
what is a good growth rate? See, they have a sheet in the Learning Center. I don't know if it's in the Learning Center or Finding Great Stocks, but it
Let's
tells
see.
you everything that's here. You know, what is a good growth rate? What is a good ESP? Financial strength. It tells you
Mm,
all those things on that sheet. But now, what
mhm,
they've done for those that aren't going to look for a sheet and are dependent upon AI, it has given you this AI. And you can type those questions in and it'll give you this. And that's really important to know.
mhm.
Now, what I have also been doing, I like Perplexity. I know a lot of people are Chat GTP. I like Perplexity. And you still have to do your analysis. But a lot of when you want to know about a stock, you can go to Perplexity. It will tell you all the information, but not only will it tell you the information, it tells you where it gets it. It puts in all the links. Now, they can lie to you. I don't believe in AI. So you got to go and do the analysis yourself to make sure it's telling you the truth. But I think it's really helpful that you know that AI icon and link is there for you to put the basic information in right then, right there. You don't have to go hunting and pecking into the Learning Center or finding great stocks. If you need help specifically on a stock, you can use. Well, again, I enjoy Value Line. I'm definitely a Value Line girl. But when you put Value Line, when you put Perplexity, and when you put Morningstar together, it's a lot of good information, concise information to help you. Okay, that really was my presentation, and I appreciate you very much, Doretha, helping me.
Absolutely.
We'll go ahead and share next. Good morning, everyone.
Thank you, Nicole.
Nicole Allen. I guess this is the season or the month of learning. I've spent quite a bit of time just kind of going through my own portfolio. I have investment accounts with Fidelity, and normally, I'm just adding stocks, looking at using the SSG tools and other things to evaluate the stocks. But Fidelity actually has a really good, I mean, it's a really good platform for delving deep into your stocks and, doing some analysis, looking at the allocations, trying to balance your recommendations. So I've actually been using some of their AI embedded tools to sort of help me look at specifically my allocation. When I initially started, I wasn't looking at an appropriate percentage for small, medium, and large stocks. And so it just kind of, started out with things that I were interested in or companies that but I've been using to go more into um, recommendations of stocks that are in that same company class or size category that may be alternative. I've been able to, it gives me like all of my upcoming events related to the stock so I can track, when I'm expected earnings, um, when my stocks hit a 52-week high or low, without looking at the individual stock, I can look at the entire portfolio and all of my other portfolio or investment accounts in one one frame, I guess would be the best word. Because I'm managing both my accounts and my kids' accounts, it can be very arduous switching from this account and looking and trying to figure out, whose portfolio is doing the best, or just sort of trying to categorize what's, what the performance looks like. So in addition to the tools that are embedded into Fidelity, I've also started using this AI program called, what is that called? Seeking Alpha. Um, it is an AI program. It allows, let me see if I can put the link in the chat. Right now, I'm just on the free version. However, it's very, well, I'm not going to say affordable. It's like $5 a month. And with that program, you can, in addition to analyzing your entire portfolio or just one particular asset, you get access to investor content. You're able to join a community of other investors similar to Better Investing to get advice. You get recommendations about not just stocks, but also ETFs and mutual funds and things of that nature. There's a newsletter similar to Ticker Talk that gives ideas about stocks that you may be interested or maybe want to take a look at. And it's just really right now, as I've been trying it out the last month or so, it's just been a great added asset to what I'm currently using in my portfolio and through Better Investing. Really just trying to gain more knowledge, trying to be a smarter investor, and trying to be more, what's the word, intentional about the types of companies that I'm investing in for the long term. So I really like the portfolio checkup that's in Seeking Alpha. Because, like I say, it does look at the entire portfolio. So you can have, brokerages, Roth IRAs, and you can bundle them all together. And it looks across all of those different portfolios. So, yeah, that's what I'm doing right now, just trying to learn more. Definitely that SSG guide has been very helpful. I've gone through most of my stocks, each individual stocks to kind of put in my buy sell ranges so that I can get alerts, if it hits my target. And so that's helpful as well. And that's what I have to share.
All right, Nicole, thank you so very much for sharing. And also, we're looking forward to having your children here so that over time they can learn to manage their own portfolio as a part of the education for the youth, right?
Yes, absolutely.
Right, thank you. Okay, Carolyn, you ready? Or Valencia? Valencia, I think you may have to go last.
This is
Thelma?
Carolyn. Morning, everyone.
Go ahead, Carolyn.
Yes. Okay, mine is from the magazine. it was August 2025 magazine. And it was actually it's two things I have to discuss. This was speaking about the my iClub features. So there are two new features in my iClub. One, the ability for the to go have a public page for the club and reporting all details on the stock to transfer. And the other one is, doing a full transfer and having the remainder for the members. So it's more involved than what we normally use. So I guess we'll have to look into that to show to get the whole picture of and use the new features that we have. But my main lesson here was reading on it had it's about 30 years ago when it had these young ladies to call themselves the 12 girls in finance. But they were actually teachers. Most of them was teachers and school administrators, and they created a investment club. And I guess being teachers, what they did, each member will prepare their own stock studies, but any new member that they will have, they will assign them a mentor. So then they will teach that how to educate that new member how to do the selective guide process and everything. And for their stock watches, they rotate annually. And what they will also do that when they have a stock on watch, every quarter when Value Line has a new report comes out, they will go ahead and report on the stocks that they're actually watching. Um, okay. And in regards to their portfolio, when regards to the portfolio, the stock watches, they, most of the time we said, oh, it's on watch. They were saying that you have to watch that stock, evaluate that stock as much as you can, because you have to look for the company with the low, or the companies that you have with the low and zero growth. You need to replace those stocks. So, and also we're looking for stocks that mediocre growth, also replace it, because most of the time we have stock, but because of the name brand, we want to hold on to it. But if it's not growing, that's what they did. They went ahead and replaced it with a better growing stock. So in that way, over the years, their stock, their portfolio had increased tremendously. And that's all I wanted to share, because the whole idea behind the principle that they have as being teachers and teaching others to do the same, that's our principle here. That's why we have today as education, to teach one another of certain things that we need to do, and also as a club to bring people on to know that we are here to help you to start how to invest in yourself and leave a legacy for your children. And that's it for me. Thank you.
Thank you so very much. Zelda or Doretha, not Doretha, Valencia or Zelda, anything you want to share? Valencia or Zelda, right? Okay, not hearing any? Or maybe you're coming on off mute. All right, I'll go ahead and share. I actually have two items. If either one of you decide to come off mute, just raise your hand or let me know. Uh, I'm rereading this book. It is entitled From Little Acorns Grow Main Street Millionaires. And the book really is about the history of the NAIC, which was the National Association of Investment Clubs, that later became what we now know as Better Investing. And there's just a portion in here that I'd like to read so that I can get it right. And basically, it talks about how during the downsizing of the market, and this would include, he says, in the late 1900s, anyone who had anything invested in the in stocks or mutual funds did well. Then came the 2000s. The bull was blindsided and the bottom fell out. It started in technology sector, ending wild speculation and sky high stock prices. These were based on hype and spend instead of sound management and experiences that NAIC preaches is what determine real value. The collapse of technology led by the so-called internet.com companies that turned into dot bombs was soon followed by a much deeper and more widespread market plunge. The Dow index dropped 6.2% in 2000. Standard & Poor's 10%, and the NASDAQ dropped by 52%. That was 2000. Now I want to drop down. He goes on to explain how the Better Investing members survived through these crises. And his particular club, uh, we're talking about the founders of this organization. The portfolio went down to $250,000. Then I'm going to jump to the end and read this. The founders of this organization, the name of their club was Mutual Investment Club. And it says that they remembered back in the 60s when the portfolio of the Mutual Investment Club reached a net worth of $500,000. It was already time soon dashed when the market plunged. Members helplessly watched as bear conditions cut the value of their holdings to $280,000. Now, I'm reading this because I want to get it right for all of us, that as we go through things in the market, to just be steady if you are following the principles. And he goes on to say, however, they never wavered, renewing their commitment to stay the course, to follow the principles, pick the best companies, and keep investing no matter what the market conditions. That bear market basically got worse and worse. For 18 years, that market declined or stagnated. Put the book here, or stagnated. But when it finally turned bull again in the 80s, the mutual holdings drastically rose, appreciating a value of $1.4 million. No, the market gyrations of the early 2001 were to be expected. Now, I'm not going to read all of this. I will say that personally, I had an opportunity when I first got into bet investing to meet Mr. O'Hara during a session that he was holding as a part of the bet investing NAIC conference. And that portfolio at that time was $12 million. And that's even after they took out millions of dollars during the years. And so I just wanted to share that to encourage all of our NAIC Better Investing members, like our club members. Stay the course. That's what this story and this principle. And if you'd like to get the book, it's called From Little Acorns Grow Main Street Millionaires. You can get it from betterinvesting.org, or you can get it from Amazon. You can get it from anywhere. I have one more, but I'm going to wrap up with my video on the SSG, confirming everything that Sharon and Doretha shared. Anybody else want to share before we start wrapping up with the last video, which is short? Yes, there's a hand. There's a hand raised. If you want to come on camera.
Good day, Ann. This is Mr. Rogers. How are you, ma'am?
Very well. Thank you, sir. Thank you for joining us, Mr. Rogers.
Yes, ma'am. Apologies for missing the previous session. My person was obedient and did go log in. It didn't have to redo anything. I was still there. So I appreciate what you're doing. It's a beautiful thing. And my share would be um, from some of my experiences, because as you know, I'm a trader as well as an investor. One thing, if you would have your investors research is that I learned from taking hedge funds classes is the UVXY and the MBXIX. They are an ETF and mutual fund that will hedge in those bearish-like conditions when they do occur. You add them to your portfolio. One of them actually will make money in the profit gaining side when the market's well, and then when a bear hits, it will continue to have a reduced gain, but still nonetheless a gain. So that would be my share, and I love your programs. Thank you for keeping me in the loop, and everyone, I hope you all have a great day, and happy Veterans Day to those who have been of service.
Thank you so very much. Really appreciate that. And also want to thank everybody that's joining. And again, um, many prayers for all of the veterans. And we have many veterans as a part of our families. So I want to thank you, Mr. Rogers, for sharing. I just want to make sure if we have any other members that would like to share. I have one last video. I like to usually share a video before we wrap up, because if not, then we'll go ahead. We'll go ahead and go to the video. Anybody else want to share anything before we wrap up? Anything else?
And I don't have anything else to share, but if Mr. Rogers could put those mutual funds in our chat, that will help. Thank you.
Okay, thank you so very much for that, Doretha and Mr. Rogers. Doretha's asked if you would be so kind to put that information in the chat.
One last comment. I am so glad that he said this. I wasn't going to say anything because I wasn't sure it was appropriate. Yes, I work for the Veterans Administration, so everyone today, when you come upon a vet, make sure that you tell them that you're grateful for their service. That's it for my commercial.
Thank you so very much, Sharon. We're gonna. Okay. All right, so we're going to go ahead and we're going to share this final video, and want to wish everybody safe Veterans Day. And like Sharon said, please make sure we let our veterans know how much we appreciate them. So.
I'm going to show you a quick and easy way to do a stock study guide. And the company that I decided to pick was Walt Disney. Ticker symbol is DIS. So if you highlight over their name, you're in the SSG plus layout, but if you highlight over their name, you can see that it gives you an industry, sector, company size, and a quick description of the company and what they do and kind of things that they own. But basically, we're going to be looking at their trend. So when you first get into a stock study guide, you want to see that their trend is positive, so it's going up in a steady manner. And then you also want to see all these other different trends, like the pre-tax profit, the earnings per share. You want them to be kind of rolling up in a ladder almost, very parallel to each other. And when you kind of start to see them trending off or doing some funky stuff, that might throw some red flags, and you might need to look into doing some further investigation of the company. So we're going to go to research, and we're going to hit better investing, member sentiment, and this is basically every single stock study guide that has been done in the last 90 days on better investing. So if you scroll all the way down and you hit select and you scroll all the way down, you'll select all of these SSGs that have been completed by other club members, and you can see that it gives you an average. So you have average of sales, earnings per shares, high PE, high EPS, high price, low PE, low EPS, low price. All these things are already kind of figured out for you. And this is a quick and easy way of just not using your opinion, just using the opinion of other people, but gathering some information kind of like a base average of what everybody thinks. And so what we're going to do is I'm going to take a little screenshot of this and set it off to the side. We're going to go back to the original page, the analyzing growth and quality page, and we're going to come down to the fundamental company data. You're going to look at historical sales. Obviously you want them trending up. I mean, if it's starting to trend down, that could be a red flag. But you can see that in 2019 they were able to pull in $69.5 billion in sales. And even though it says 69,570, you got to understand that it's in millions. So just add a million marker to that, which would equate to 69.5 billion. Their average growth rate over the last 10 years was about 6.3%, which is good. Typically for large cap companies, you're looking at anywhere between 5 to 7% is kind of where you want your growth rate to be. For small caps, you want 12% or higher, and medium caps, you want to be anywhere from between 7 and 12%. So first we're going to click our earnings, our historical sales, and it's asking for our 5-year forecast sales growth rate. So we're going to go back to our better in sentiment, where we either wrote down the numbers, the averages, or we've screenshotted it, and we're going to go to sales all the way down, and we're going to use the average, which is 8.6, and we're going to input that into our stock study guide and update it. And see, you can see it generates our 5-year estimate of growth. Now we're going to go to historical's earnings per share, and you want that to be also climbing pretty steadily. Earnings per share is basically a way to show how profitable the company is. It kind of gives you a cost dollar average. So we're climbing up. We kind of hit a peak in 2018, and then we take a dive in 2019. That could kind of raise some red flags, but also you got to think about Disney did just roll out with their Disney Plus, and they've purchased ESPN, and they have all these different acquisitions that have occurred. So that could be affecting a lot of these numbers, but overall it's not a horrible number. 15% earnings per share is not bad. And then we're going to enter in, we're going to click on this little green circle, we're going to enter in our earnings per share growth rate forecast over the next 5 years. And don't worry about any of this other stuff for now. This is more when you get into your own opinion. We're just going to do a very basic breakdown. So we'll go back to our screenshot, and we'll look for earnings per share, which is right here, and we're going to get 8.7. So 8.7, and we're going to update the study.
Do you need a loan for your business? Well, if you've been around for over a year, I'm about to show you how to get up to $3 million in funding. Sounds too good to be true. Then come closer. I'm about to show you how you can access the capital your business needs without putting up a king's ransom to get it. You don't need a $100 million business. You don't need to spend weeks filling out paperwork, and you certainly don't need to pay sky-high interest rates.
Okay,
All you need is a business that's older than 12 months and makes at least $200,000 in revenue per year. Check it out. Every single day, thousands of business owners across the country get loans to expand their operations, hire new staff, or purchase new equipment. That's
All right,
billions
everybody.
of dollars in funding available to help small and medium-sized businesses like yours. You could get up to $3 million in your account by tomorrow. And that's why we created My Business Loan Companion. My Business Loan Companion is designed to help business owners like you.
So
get the
we're
funding
going to
you
go
need
ahead and
quickly
end that
and
because we're
easily.
not.
With
we're not
My Business Loan
encouraging that.
Companion, you get
Stop that.
Okay, and now this first page is completed. Typically with the evaluate management, I kind of just glance over these. You want your pre-tax profit to steadily be increasing. You don't want it to be decreasing. Obviously in 2019, it's decreasing.
You're no longer sharing your screen.
Oh, sorry about that.
You gotta look at the
I was trying to
companies,
stop
you want
her
what's kind of been going on with
from.
their management team.
Sorry about that.
Return on equity, you want it to
Hold
be,
on one
you want to be
second.
looking for a return on equity of about 15% to 20%.
Can you
Some of the
hear it
best
though?
companies out there have about a 20% return on equity, which is pretty good.
How about now?
And then you want to look at debt to capital. You want it obviously to be going down. You
Yes,
don't
we
want it
can
to
see
be,
it now.
you
All
don't
right,
want
my
them to be
apologies.
holding
I
a
was
bunch of
trying to
debt
do away with
because that affects your
commercial.
profit. typically you would want to be looking for anywhere between 33% or lower for debt, which they're right on the cusp, but it's pretty good. Like I said, they just made a bunch of different acquisitions. So the first page is done. Now we're going to go to valuation and return. I wouldn't worry about this number 3 tab. That's more for your opinion based stock study guide. Like I said, this is just a very basic breakdown, quick and easy. Now we're going to come into number 4, high price over the next 5 years. So this is kind of predicting the the high price based off of your profit earnings ratio. So if we go to our better sentiment screenshot, we can go to our high PE, which comes down, we got 20.43. We can use that number, kind of predict the outcome of our high price, which it's coming out to be $183.20 roughly. Okay, so we got our high price now, and this is just a forecast. And now we're going to come down to low price over the next 5 years, and you don't really need to know any of this stuff because it's kind of just a breakdown of it, but we're going to go down to the green box. Like I said, skip. This is all just what we just talked about. Let's just skip all this. This is more for opinion based. So you're going to select your low stock price forecast, and we're going to come down to 96.87. 96.87. That's our low price. That's estimated from everybody in the club. Oh, they only like 1 decimal point, so delete that. So as you can see, everything is generated now, and we're looking at our evaluating risk at a glance. So it's currently telling us that we're in the hold zone, so this is not something that we really want to be buying at the moment. The forecasted high price is about $183.30. The forecasted low price is $96.80, and just as of yesterday, the closing price was $140.37. So you're looking at an upside down ratio of about 1-to-1, which we're typically, when we look for companies, we want to be looking at a 3-to-1 or higher. The potential price appreciation is at 30%, which is, it's okay, not bad. So now we're going to come down to subcategory C, zoning, and you have this option right here. If you toggle it, like click on it, you can switch it back and forth between 33, 33, 33 or 25, 50, 25. And that's basically just showing you the tolerant, like the conservative or risky investing. So we'll click on this show hide gain versus loss chart, and this will kind of break down where we're at with our buy, hold, or sell. Currently, it's telling us that we're in dead center of hold. So this is a company that we should be watching, but not necessarily be looking at buying anytime soon. And you can toggle this. So we'll go back to the conservative 25, 50, 25, and you see the graph has changed a little bit. The hold is a lot bigger, but we're still just dead center of the gain versus loss chart. So company we should be holding on, we shouldn't be buying at the moment. This is a 5-year potential breakdown. At this point, if you're just doing a very basic stock study guide, you don't really need to know a lot about this. So we've basically finished our stock study guide at this point, and we're gonna go up to print.
On August 22nd, I told viewers that the road to artificial general intelligence was already bringing massive changes to society and disrupting industries around the world.
And you can choose whether or not to select all the notes that are applied to this SSG, and you can either check off quarterly growth trend data. So it's going to include all the quarterly growth trend data over the last 9 years, I believe. And we're going to generate the PDF. Earnings per share trending off, which is a little bit concerning, but it's all right. We could do some further research into it. And then the estimated future sales growth that you input, which is 8.6, the historical sales growth, which is 6.3 that they've actually had over the last 9 years. Then you got the historical earnings per share growth, which has been 15%, and then you got your estimated future earnings per share growth in there at 8.7%. This is the evaluating the management, and then the breaking down the price earnings history, and which we really didn't look at. But then you come down to our evaluating the risk and reward over the next 5 years. Our inputted price was, our high price was $183, and then your low price was $96. You can see right here. Our zoning was set to 25, 50, 25, which is pretty conservative, and it put us in a hold zone. So currently, like I said, we're not looking to buy the stock, but good company to be aware of and keep an eye on. And then our upside down ratio is 1-to-1, and then like I said as well, it should be about 3-to-1. Then you can scroll down further and you can get down here and you see all the notes that either you put in or the community put in. This is basically just some key notes that people thought were important or you thought were important. And then going down further, you got your quarterly data, your last 12 months data, so TTM, and it kind of breaks down everything all the way back to December of 2009. So that's basically how you complete an SSG, super quick and easy, and you can do this with any stock, just using better sediment. Hope you enjoyed the video. Like and subscribe, and let me know if you have any questions in the comments below.
All right, thank you, everybody. All right, everybody have a great day. Thank you.